Hey folks, I hope everybody's having a great day. In today's video, we're going to give an update on our high yield dividend portfolio, how it's performing to the high volatile market that we've experienced in the past couple of weeks, and some lessons learned on margin. So glad you found this channel. My name is Alex. This is 9 to 5 to Freedom. In this channel, I'm just documenting my journey of working a 9 to 5 corporate job, how I started as electrical engineer, my investments into real estate, and more recently, what I'm doing with high yield dividend ETFs. So without further ado, let's hop right into it, folks. All right, again, wanted to give a shout out to some new subscribers. We're up to 27 subscribers on this channel. If you're new to this channel, check out some of my videos. I'm doing weekly reports on the portfolio. We invested a little bit over $12,000 into some high yield dividend ETFs and giving some updates on how they're performing. Talk about some other stuff, my career path, real estate, more stuff to be made in the future. So check all that stuff out. Okay, so markets. Markets are a little bit rocky, folks. Ever since the end of February, announcement of tariffs by President Trump, the trade wars that we're entering into, lots of uncertainty. If we look at the S&P 500, year to date, we're down 2%. 1 month over, we're down 5%. 5 days, we're down 4%. And today, we're already down 0.38%. And this is around noon as we're filming this. Okay, so these are our dividends that we received so far this year. That's what we're using to track them. Not going to bore you with this today. We haven't received any dividends this week yet. But year to date, we're at $641. Here's a snapshot of my portfolio. As you can see, it's a total wreck. Everything's red. I'm down 14.72% year to date. And total balance right now is at $10,651. Now, please note I do have some calls in here that have not turned out very favorable so far, but we still have some time. We'll see if some of these tickers roll up here. Wanted to quickly go through some of these ETFs and show you the performance. I'm just going to use this snapshot as we're going to cross this stuff out. What doesn't pertain to us, we're not going to look at this. We're not going to look at the stocks that I'm investing in. That's not really of our interest. Okay, so really wanted to take a look at the Round Hills XPay is one of my favorites. As you can see, year to date, we're down 4%. So tracking really well with the overall S&P 500. So I'm just going to highlight that green. I think that's performing overall pretty good. USA Fund, I just have a few shares in here, just track and see how it's performing. Down 4.91. This one pays out on quarterly. I haven't received a single dividend yet on this one. Now we're getting to JEPQ from JP Morgan, down 5%. Overall, I would say not bad. And this one does grow, and it's paying out pretty decent dividends, I think around 10% or so. XDTE, QDT, RDT, these three funds, again, these are all from Round Hill. You can see their performance. XDT down almost 6%, QDT down almost 8%, and RDTE almost down 8.5% or so. So overall, as you can see, they are doing worse off than the S&P 500. Some of these are tracking the NASDAQ 100 small cap, so it's not very good comparison to compare that to the S&P 500. But they do pay out pretty high dividends. So these are the funds that I'm really liking so far. I think I'm right now debating on how much I want to allocate as I'm receiving a large sum of money from a real estate transaction. CLM, CRF down here, these are their cornerstone funds. These funds are a little funny because they actually pay you 30% when you drip at the NAV every month. So that kind of gets baked into them. And as you can see, they're kind of down. Not sure what I'm going to do with them at this point. I'm just going to let them ride out. These are the only two that I am dripping. For those who don't know, drip is just reinvesting whatever dividends you're receiving. FEPI from Rex Fund, this is down 11%. Not really liking it too much. I think this is one of the ones that I'm not really going to invest in. YMAX, YMAG, these are very popular in the YouTube community. As you can see, these are down 13.4, 14.4%. Tax purposes wise, I don't know if this is the best ones to invest in. I'm just going to cross them out for now. Single stock ones, MSTY, Coney, and TSLP from Curve. You can see these are getting wrecked completely. So lots of NAV erosion here. You can see some of the bounce backs we've seen today. And we see that CRF had a little bounce back, CLM from Cornerstone. Looks like it's tracking positive 2% on MSTR. And everything else is red, folks. So not a very good story to tell. But, you know, this is why we're doing this. We invested a small amount of money and just to see how things are going to pan out. And so far, I would say the market's very choppy. I think if you have a larger portfolio, you're probably feeling that pain much more as of right now. We are about 30% margin on our account. If I go to balances, you can see the breakdown here. Account equity percentage. So we are at, you know, reasonably cautious amount of margin. But this is the thing with margin, folks. As everything is falling down with this market volatility, we are experiencing these drops. And when you have something margined, really you're losing that value. So you have the risk of getting a margin call, and that could get hairy for you. So right now, you know, I'm following some folks, and some of them are really in a bad spot because those who had 30, 50% margin on some of these yield max and stuff, and they're just getting wrecked. Their portfolios are getting wrecked. They're panicking. They're trying to sell off. So that's the thing, guys. There's really no free lunch. You take margin, you're taking the risk. You're having a you know, market like this where you've seen 5% drop in a month, you might start to panic a little bit. Because think about it, if you got $50,000 on margin, okay, you are losing, you know, 5% right off the top of that, aside from your own portfolio. So that's something that you want to consider. That's something you have to pay back if it doesn't bounce back. But just be cautious of using margin. And again, this isn't financial advice. Okay, so real quick, folks, this is what I want to talk about, and I'm going to make a separate video on it. I was able to negotiate the margin rate with Fidelity down to 6.375%. I had this at over 12% just a week ago. So like I said, I'll do a separate video on my tactic on how I negotiated this. So make sure you check out that video. All right, we'll just hop into the dividend view real quick. As you can see, here's our portfolio right now, $10,500. Expected dividend payout, $5,394 for the year. So right now, I have drip off on all of my ETFs aside from Cornerstone, CLM, and CRF because they drip at the NAV. I get a 30% discount basically. Everything else is going into my cash portfolio. So we're paying down that margin, and we're trying to get a good understanding of what actually is being earned and to see how well these funds are performing. Okay, folks, so that's going to do it for today. We will have another summary, the weekly summary that we do on Fridays. Once the dividends, weekly dividends do come in, we'll post those and see how the market is doing. Again, if you like this type of content, please give me a thumbs up, subscribe to this channel, and we'll see you on more future videos. Thanks, folks.